Good morning, afternoon, or evening, ladies and gentlemen. Happy Friday, all in crypto here. And today we're going to be presenting another daily cryptocurrency market update. For those of you that are new around here, every single day at 1 p.m., we release a market update where we don't just look at the cryptocurrency markets, but we look at markets surrounding it, the macro environment, and everything in between. We're one of the few crypto channels that has this understanding. And actually, this has allowed us to be rather successful in the investment arena. So that's kind of what we're going to be doing in this video, or that is what we're going to be doing in this video. We're predominantly going to be looking at the macro. We had news that the Eurozone has officially had 2 consecutive quarters of negative growth. This is commonly referred to, or technically referred to, as a recession. However, in the US, they have kind of rephrased this, and there is a bit of a debate between people on the side of calling a recession 2 negative quarters, or people who think there's a little bit more that has to go into it. So I'm neither here nor there, really. I think a historic reference has always been a historic reference. And actually, if you follow the term recession, years and years ago, it started off being called a panic, and then a depression, and then a recession, and now it will just be called, who knows? They'll make up some friendly, accommodating word for it. But that's going on. Technically, we're falling back on technicals that we have quite a lot here, because we believe that crypto is going to have a bloody good run this year. It already has. The stock market will continue to see upside. It's officially the S&P out of a recession at this point, or has entered a bull market and out of a bear market territory. We think more of this continues. We think gold's going to have a great run. We think the dollar's going to continue to wane. And we think this predominantly, technically, we also have the United States rates, which we believe are going to go sideways. And we've done lots of analysis. They're calling it a skip, implying that maybe there'll be another one coming down the line, but we'll see. So a pause in rates historically has seen the S&P do very well. We know the correlation with Bitcoin and the S&P. And that is come from, we've got that analysis based on over here. However, there's a lot of things going on the macro, like recessionary fears, like, uptick in unemployment in the US specifically, like, manufacturing indexes getting hit pretty hard and going into sort of near recessionary levels, like the yield curve. There's so much going on. We try and make sense of it all, and we're going to do that in this video. So we're going to start off with the technicals. Then we're going to go into the rates, where rates are, what happens with the markets under certain rate regimes. And then we're going to be looking at some comments from Lynn Alden talking about the balance sheet, looking at some comments from Yellen talking about inflation, talking about the overnight reserve repo market, talking about the Treasury's cash reserves, which they've dumped, which has actually offset a lot of QT that's been happening from the Fed, that they are now set to replenish, whether they choose to do this through the overnight repo. They've already started issuing bonds and selling that into the market, which is why you've seen yields climb. There's a hell of a lot going on. So let's get into it all, guys, after that rather long and timely introduction. Bitcoin. Bitcoin is the barometer that we use for the wider cryptocurrency market. This is the Bitcoin chart. And of course, this is your total too. Looks very similar, right? And we put this moving average on. The 200 weekly moving average by many technical analyzers is considered a very good support level. It's considered a way of looking at the market relative strength and weakness. Nothing typically good happens underneath. And actually, holding it is something that historically, if we look at the Brave New Liquid Coin Index specifically for Bitcoin, it's done. And this is why we said, look, you're probably going to get, it's been interesting because the week started off very, very negative, but you're likely going to get bidders here. And you can see if you look at these candles, you are indeed getting people bidding this moving average up. Taking the moving average off the chart and looking at a lot of what we've been speaking about, you guys will know that we got back into the markets at the start of the year after being out of them in 2022. We assessed that there was going to be an end to the tight regime and markets would front run this. We looked at what happens with pauses in rates. We looked at the divergences that were showing up, the weakness of this trend in regards to where it was at. And of course, FTX being a big component in why we saw this downside when the likes of the S&P did not. S&P started rallying a lot later. We expected that Bitcoin would have its time shine. It's almost like the stock market is leading Bitcoin. We've looked at this, but ultimately we took a long position back in. Then we had technical structure, which is this inverse head and shoulders. We know at what point we're invalidated. We've broken it. We were loading up here. Really, we've continued to load up and actually bought cryptos recently. You want to find out more about that, what I'm buying, where I'm buying, please do consider joining the Patreon. You do get daily feedback from me and also weekly updates, amongst other things like my portfolio, small altcoins we're looking at, trades we've taken and we're still in currently, and everything in between. But you ultimately have this significant resistance at 30K that we looked at as resistance playing out. Now, if you look at the likes of, this is you've almost got like a yin and a yang here, right? You're kind of doing something like this, and I think you're going to do this, by the way, guys. But I think you've ran into resistance, and there's other markets that look similar. There's similar DNA across the board. This is something that we've looked at. For example, the Nasdaq, which we told people not to short here, potential inverse head and shoulders again. You've got the SPY, which has a similar setup that actually takes you to new all-time highs. Remember the context, ladies and gentlemen, of what happens under sideways rates. So this is the last time. Let's bring the Fed funds up, because people think we're disingenuous on this channel and that we're trying to fool you into believing something because it benefits me. Everything that we bring up on this channel, guys, you can go and check and should check yourself. The last time they paused rates, or now they're going to call it a skip, a little bit more PC, I guess. But this is the last time that they paused rates. You had the market selling off. Okay. They paused it. Market's selling off. They're about to pause, potentially in the next one, which we'll talk about in just a second. The market went on and put in a new all-time high. Again, very harsh monetary regime. Low point for the market. Paused rates, new all-time high. Here's a little bit of an exception. This is when they paused rates. This is a bit of a different context. But you can even see here, they paused rates, markets were at low point, went on to put in just shy of a high. And then, of course, you had the dot-com implosion. Again, pausing of rates, market goes on a big run. This is going all the way back to 1993. Pausing. You know, you can go and look at the historic data, but looking at the more recent data, as I think it's more applicable to the economy, this is what we think is potentially to come. And technically, you've got your inverse head and shoulders for the S&P that's there. The S&P, you could argue, is leading Bitcoin. Bitcoin's at this point here, guys. You know, you can see it's still, doesn't really show up very well there. It's still at its resistance here, whereas the S&P has gone on and put a foot above it. If you look at the likes of Apple, for example, Apple put in a new all-time high. How's that for your bear market? We've obviously done quite a bit of talking about this. This is the technical stuff, guys. We'll get into all the macro in just a second. It's going to be quite a comprehensive update simply because it is Friday and we've got a big week coming ahead. You know, you did a similar thing. You rejected off it. You pulled back. You've come back up. You've taken it. You've held it. Kind of like what Bitcoin's doing at its 25K, coming back to it, and then you set up for continuation. We think this is to come for Bitcoin, guys, and crypto. Altcoins, some altcoins we are actually considering we've been buying since the start of the year. At one point, we were massively in profits. There are certain altcoins that we are actually marginally down on at the moment. I have no shame in saying that because we have invested in these altcoins, understanding that we were never going to be able to perfectly time the bottom. I am a mere human, but we ultimately think that there's a pretty bright future, despite everything going on ahead of us. Even just for the remainder of the year, we are looking at the yield curve. We do think that's going to play out. Gold, we think, is going to go on and take new all-time highs. Bull flag, break, retest, continuation. We think that's to come. And we think crypto does well, despite the SEC, just like we've thought the markets were going to do well from the start of the year to now, despite all the doom and gloom out there. So this is from the Sniper. The Crypto Sniper is somebody who I've taken massive, massive influence from, learned a hell of a lot off of. Somebody who I think deserves far, far more recognition than he gets. But the most bullish Bitcoin pullback flag channel that so few appreciate, the next significant move is firmly up in our view. Also watch key stats, altcoins with it. And he's tagged me in this. This is very much what we're envisioning. Bull flag retracement, post triggered target, post triggering event at 25k. Sniper's always been on this page. And in many regards, he's the reason we were able to spot the market moves before they happened and get back in from an investment point of view. So this is the plan. 40k, obviously the log target. 35k is a non-log target, depending on how you choose to take your targets. This kind of fits in with what we're looking at with sideways rates, with what the likes of, we think this is to come. And believe me, guys, once this 30k gets taken, everybody flips bullish. And all of a sudden, the doom and gloom doesn't matter. There are certain altcoins that have been hit very hard with the SEC news. That's the SEC's protecting you, apparently. But ultimately, I think sideways rates are coming. The probability of a hike is now 27%. Non-hike, so a pause or a skip, as they are now calling it, is 72%. Remember what the markets did as well when they went from doing 75 basis points down to 50. And then they went from 50 down to 2.5. So December the 14th and February the 1st. Let's use the S&P first and then relate it to Bitcoin. Nasdaq's probably a little bit better to use. We don't want a 1 hourly. Nasdaq's probably a bit better to use because the S&P had kind of bottomed before the Nasdaq and, of course, before Bitcoin. But where are we? December the 14th, which is here. What did the markets do and have done since then? And February the 1st, which is here. So actually, this is very interesting that they initially jumped and then retraced. Nasdaq, for example, December the 14th, they actually sold off on a lower hike, but then went higher. And this is February the 1st. So this is interesting. Do we think perhaps with a rate hike that the markets could sell off initially before realizing a direction? Well, they do look, for example, in the SPY like they're at a position where they might want to find resistance. This is going to be something to watch. What did Bitcoin do under them lowering rates? Almost signified the bottom here. This was the 14th. You did get that initial sell-off. But then you got continuation, of course, February the 1st. Again, pullbacks, but set up for more upside. So what's going to happen? Is there one final stab lower in 5 days' time to retest that? And then we get that continuation? Potentially. Again, we've done a lot of analysis on what happens under sideways rates. Let's move on to a little bit of the macro because we're now 13 minutes in. We'll try and fly through all this. Notable for liquidity, the Fed balance sheet increased this past week for the first time since mid-March. There are all sorts of timing issues associated with the Fed balance sheet, so weekly activities can't be read into too much. But they did an uptick in loans and a little QT. So Fed balance sheet is one way of looking at liquidity. Let's bring it up. And I believe that the markets ran Silicon Valley stimulus. And they'll go, no, it's not stimulus. At any time the Fed are supporting the market, that's stimulus in my opinion. Let's get good old Bitcoin up. S&P. It's almost like, look at how in tune, by the way, these are. The markets ran, then rolling the balance sheet off, interest rates going up. In the same way, they'll front run a reversal and a revive in this. And that's the only solution for the dollar. So it's almost like they knew that this was going to happen, you're now starting to see a slight uptick again in this and a nullifying of the QT that's going on. There is something important to watch with the cash reserves. Yellen, it's a combination of Janet and Yellen. Yellen, we'll call her, is set to start building up cash reserves that she's had to dump in order to get the balance sheet, the debt ceiling raised. So that's going to take liquidity out of the market, and she's actually offset through dumping this cash into the markets a lot of the QT that's been happening. But this is something interesting to watch. For the fifth consecutive week, the Fed lending to banks through a bank term funding program has edged up to another high, hitting $100 billion as of Wednesday. We also have the BTFP usage increasing. So this is liquidity and credit facilities loans bank term funding program next Wednesday. And you've got to be very careful because how they get people is on naivety, right? So the Fed understand the system way better than most people do. And they can say one thing, but do another without the masses really realizing. It's like the March 2020 bailouts, for example, that happened with banks. There's a lot of rumors that was just a complete banking bailout. Banks got trillions, some Swiss banks, was it? Got trillions of dollars worth of bailouts during that time period. Trillions, which is a bit strange. But there's a lot going on. You've got this, which is interesting. You've got Yellen Powell downplaying inflation risks as Yellen foreshadows future spending. If you understand the system, it has to continue to grow and spend. Because if they hold things tight for too long, it's like they've been doing a lot of tough talking and very hawkish, but at the same time, they've been doing a lot of things that are not in line with that. Because they can't at this point. You know, if you look at just the debt payments that they've got, the interest on the debt payments, so on and so forth. We do think inflation is subsiding. We think this is going to contribute to them. We think you're going to have a lower CPI from the day before, so in 4 days. Then you've got PPI. Then you've got the hike decision. We think there's going to be a lower CPI. We think the one after that's likely going to be lower. We follow true inflation stats for that. Markets know this. You know, what's driven the Fed? Inflation. You've now got this coming off the back end. I don't think inflation is going to be as big a risk as people think it is. I think inflation actually is likely going to come down. It's already, according to true inflation, at 2.8%. I think it comes down significantly more. And I actually think that if you look at oil looks like it may want to spill. We might do a whole video on oil in relation to the economy. And they are set to spend. The thing with the spending is they need to raise that money up through issuing more debt, which gets dumped onto the markets, which has been driving the yields. The 2-year yield leads the Fed fund. The 10-year really leads the dollar. This is an issue. This is the thing I'm most concerned about, this going higher, because this would signify more rate hikes. It topped out pretty much where they've got rates at, right? This is, of course, SVB, which threw it into question. We need to see this roll. And the question is if they're dumping a load of what makes this go up into the market, is it going to do that? And this, of course, is dollar strength and everything in between. So I think markets may just be in a bit of a stagnant period moving into the rate decision. It's going to be very, very interesting. We'll see what happens. She's going to have to start replenishing this. Although the difference between them replenishing this here, which caused the repo crisis, is look how much money you had here in regards to the repo crisis. You had in the tune of you know, a couple of 100 billion, 100 billion, 2.2 billion, 200 billion, something like that. And then look how much there is today. There's 2.4 trillion, 2.1 trillion. So even if they need a trillion, they can get that out of the reserve repo market. After Germany, the Eurozone too has entered a recession. Slightly the UK will. We'll see what happens with the US. This means that recession forecasters got it right, even though 1 or 2 quarters later than expected. However, this recession is shallow and more likely linked to lagged effects of the energy crisis than the global economic turnaround. Since the odds of this happening remain elevated based on the yield curve, manufacturing PMIs, and at tighter financial conditions, the Eurozone likely gets to enjoy only a brief recovery before dipping into recession again. So there is, to summarize everything, technically, we're bullish. On a macro landscape, we are still more bullish than bearish, but there is reasons to be bearish, like Yellen replenishing the cash reserves and dumping bonds onto the markets. Also, we still have 5% interest rates. That's not good for growth. It's not good for general spending, etc., etc. And there's a lot of bad data rolling in, like upticks in employment, upticks in jobless claims, upticks in downticks in manufacturing indexes. So it's a very mixed bag. I have to be totally honest here, guys, and say I can see merit on a macro kind of landscape for both sides. Technically, however, we think you look very much set for more upside. And we think under the context of sideways rates, a skip, hop, and a jump in rates, that's what it might be. A skip, hop, and a jump, maybe, depending on how things goes. But with sideways rates, a pause, we think that markets do very well. So technically, we've got reasons to be long on Bitcoin, the SPY, multitude of other stocks, by the way. Got reason to be short on oil, reason to be short the dollar, reasons to be long gold. And then in the macro, it's quite a mixed bag because there are yings and yangs here in regards to liquidity being drained, but also liquidity being added. It's kind of like upping interest rates in itself, right? It's a huge drain on the system, but there's a part of it that's actually QE because there's a higher spending being done on paying nearly $1 trillion on paying the interest that there now is on those rates. Lot to watch. We'll keep you up to date on it consistently on this channel. Generally, we are bullish. Nothing has changed there whatsoever. The SEC hasn't. It's largely actually in what they're doing not even being factored into anything. It's something that we're watching. Technically, we've got reasons to be bullish on Bitcoin. The markets that we've mentioned, and we think that plays out until, of course, it doesn't, and the markets show us otherwise. For me, the charts are the truth. The charts are your insider trader. And that is all I've got for you on this video, guys. So next week, we've got PPIs, we've got GDPs, we've got CPIs, we've got the actual rate hike. We'll see how the markets react. And of course, we'll do a little bit more of an in-depth video on the week ahead, going into Monday. So that's all I've got for you. Have a fantastic Friday. Sorry for the long video. However, lots to cover, lots going on. We remain bullish. And what you guys choose to do is entirely up to you. On that note, I'll see you all in the next one. Thanks a lot for watching, guys. See you in the next.